Alright, well, welcome everyone to another episode of Crypto Corner, your crypto radar for all of the latest news, reviews, market analysis and tutorials that help you master the cryptocurrencies market. Well, today we have another really green day here on the markets. Everything pretty much is on the green besides Solana and Luna Terra, which are correcting after a very strong bull run over the last few days. I reported on this in my previous video, and in my analysis I actually looked in Solana as well. I was pretty sure that we are due a correction. It's already begun. It's not a big correction or anything, but in Bitcoin value it actually is more than 6%, because Bitcoin today is up 5%. 0.60 actually. 47 again, we are challenging that resistance. Now we're going to look into the chart of Bitcoin in particular today, because I want to talk about a couple of factors that I'm looking at, and one indicator that I'm still keeping my eye on that is kind of giving us a bullish signal already, but we are still at risk according to this indicator. So I'm going to talk about it. It is the pi indicator. I'm not going to give you a complete breakdown on what the pi indicator is doing or you know what it stands for or anything. I mean, there's a lot of literature already on the pi indicator, so you can check it out, but it is important. Before that, let me just quickly point out the first things that from my previous analysis yesterday. As you saw, we actually broke below this trend line yesterday, and I talked about the fact that to me this looks like a very brief pullback, and then we're going to climb back above it very quickly, which we did, which is good. We got rejected from this here. This is our support, and not the red line. This is the pi indicator. Let me actually bring on here the EMA, the 8 EMA, which is our support line, and it acted as our support line. As you know, in a bull market, we usually drop below it briefly, and very quickly after that we go back above it, which is what's happening right now. This pink line here, the 8 EMA, is acting as our support. Even when we go below in a bull market, we typically do not stay below that line for too long. Also with our trend line, we broke below it, but we got rejected. We found the strength in the buyers, and we bounced back very quickly. So all of this is very bullish in the short term, very bullish even in the long term bullish. The cross here in the MACD is also bullish for us. So a lot of bullish indicators, right? We are not in the overbought in the RSI or anything. So this is all very good. This is on the 4 hours. However, let's go on the daily and look at the pi indicator. Now, typically the pi indicator is used to actually find the market tops. And it is actually very correct in predicting a market top within 3 days. Typically, when we see the lines cross, and we're looking here at the green and the red line, these are moving averages. These are the 111 daily moving average, and the multiple, a multiple of the 350-day moving average times 2. Now, this can get very complicated if I go into too many details, so I'm going to keep it simple. What we are looking at here is these two lines crossing, and more importantly, we're looking at when the red line crosses above the green line. This indicates a market top, and this is what happened back in May, when the red line crossed above the green one, and it indicated that we have a market top, and from then we've been correcting. As you know, we are still in this correction. We are still coming out of this correction. This is actually very correct, because if you look back, I can actually give you another example. Let me just go back here, back in time we're going, just to indicate, just to illustrate to you actually how accurate this is. So here we have the 2017 bull run. This is when we saw the red line crossing above the green line here for the first time in a very long time, indicating that a possible market top has been reached or it's coming, and it was in fact very, very precise. It coincided with the market top. It was actually just a couple of days before the real market top was reached, and since then we went into a very long bear market. We actually turned the cycle and we went into a bear market. We went below both of these moving averages, and we stayed below these moving averages for a while. Now, more importantly, we went below the red line here, and this moving average is usually our support, while the green one is usually our resistance. So as we broke below our support line, line, we were in a real bear market for a long time, and we went really down. We went actually really down by something like 80% during this bear phase. Now, as we came above the red line and we turned it into a support, we had a minor bull market back in 2019. If you remember, summer of 2019, we climbed above this red line, we turned it into support, we started trading between these two lines, acting as a support, the red line, resistance, the green line. We even broke the resistance briefly, and we had another brief market top, but it wasn't a very significant top because it couldn't really break previous all-time high or anything like that. More importantly, as we fell and as we got rejected from here and we started going down and we broke below the red line again, we went into another bear phase. For quite some time we were going down and down and down, all the way until we managed to flip again and break above this red line here, turning it into support. And since then, this is back in May 2020, since then we've been in a very strong bull run, and this line was acting as our support ever since. We even managed to break above the green one, which was acting as our resistance, and as we were trending above both of these lines, we went parabolic, indicating that another market top could actually be coming. And so it happened. We actually break above the previous all-time high and another one, and then we set up a new all-time high, at which point the two lines crossed again and the red line crossed above the green one, indicating a market top has been reached, and since then we've been correcting. Now what's important here is that we just managed to break above the red line again not long ago, and this is when we actually flipped this from a resistance into our support. Currently this red line is our support. However, what we are seeing is that the two lines are really far apart, and what I've noticed, this is not something that the pi indicator is typically used for, but I noticed that correlation here. These two lines, when they're too far apart, we are still in a danger zone, meaning that we could still actually fall here, we can get rejected, we can fall again below the red line, and we can continue our downward price action. So this is very important here. So this is the danger. I'm still confident that we are in a bull run and that we are not canceling this bull run here, but I must tell you that we are still in the danger zone as we are close to this red line. As long as we are above it, we are good. But if we start correcting, if we start getting close, or God forbid break below this red line here and turn it into a resistance, we are at a danger of turning into a bear market again. And this is what I'm really looking at right now. So the next few days, and especially the next few weeks, are going to be really important for us. We have to actually, first of all, we want these two lines to start getting close together. We need to climb above this here, and as we start going higher and higher, the two lines are going to start getting closer together. As they start getting closer together, this is when we are actually getting our strongest bull runs. As you can see here, the two lines, as they are far apart, we are actually bearish. We need them to get closer together to really turn bullish. If we go back here, what we can see is, as we printed a market top and we started correcting and we went below the red line, at some point we actually climbed above it, right? This is here what we did. We managed to break above this red line. Even here we managed to break above it, and it was very brief. The two lines were really far apart. This is very similar to where we are currently. So as we failed to stay above the red line and we went below it again, break below it again, then we went into a further decline in the price. And this here is quite some time. This was not a few days or anything like that. This was here 3 or 4 months. So we are still in this danger zone. Also, we broke above it here and we stayed above it for a few weeks, but we didn't manage to stay above it for long enough, and we break below it again. We turned it into a resistance again, and this was again at the time when the two lines were really far apart. So as they are far apart, we are not really seeing a very bullish case for Bitcoin. What we need actually is, as we break above this red line and we start going up, the two lines are starting to get closer together. This is when we are getting really bullish, and this is when we are seeing the strongest bull action and the strongest price increase. So this is important for us. This is what we want to see. We want to see the two lines getting closer together as we are staying above the red line, and this is going to indicate that a parabolic run is most likely to come. This is what I'm waiting for. Here is the same thing. We stay above the red line, the two lines are getting closer and closer together. Our price action is bullish, and the price keeps going up as the two lines are getting closer. And as we start getting parabolic, the two lines are getting even closer until at some point the red line crosses the green line, indicating that we are approaching a market top, or maybe even reached a market top. And this is what happened here. So this is what I want to see. We want to see a further bullish price action and bringing the two lines together as we start getting even more parabolic. This is what I'm expecting, actually. This is what I'm counting on. But until we start seeing the two lines getting closer together, we are still at the threat of getting rejected, starting to go down, possibly breaking below the red line, which will indicate a further decline in the price, possibly consolidation going sideways, but even going down. Both of these are likely scenarios. So at this point in the long term, we are still at a bit of a threat, and I'm really looking at this indicator and I'm hoping that we're going to stay above the red line for as long as we can, as at least until the green line starts coming closer to us, which will indicate that we are in a safe zone. So this is what I wanted to point out here. We are in a safe zone in the short term, definitely. So the pi indicator is not really, for me, is not really important in the short term. So I'm going to turn it off and I'm going to go in the 1 hour. And here we're going to look at some of the shorter moving averages. So in the short term, what we can see is that we are very bullish. We are above our trend line, we are above all of the moving averages. We had a positive cross here in the moving averages. This is the 50 and the 200 daily moving averages. This is the golden cross here. So definitely we are very bullish in the short term. So over the next few days to even the next few weeks, we are bullish. However, we have to remain bullish and we have to remain above this red line on the pi indicator on the daily. So in the long term, we are still having some question marks. We are still having to confirm this price action before we can think of printing another all-time high. So this is what I wanted to point out. Very brief video today. I'm not going to take any more of your time. By the way, in the very short term, I must point out that we're just printing here on the MACD a bearish cross of the two lines. So we could actually see a bit of a correction, a bit of a pullback, maybe a rejection from this resistance where we are currently. We are still challenging this resistance and we failed to break it the last time. I feel that possibly we're gonna fail to break it again because we are quite high in the RSI on the hourly. We are seeing a bearish cross on the MACDs on the hourly. So in the short term, possibly for the next day or two, I'm not really expecting to break above this resistance. I feel that we are going to be challenged by this resistance and we are going to fail it, but this is not bearish in any case. This is just calling for another minor pullback and then another attempt. Possibly the third attempt will be more successful than the second. This episode is sponsored by Token Metrics, one of my top tools for market analysis and for finding little known altcoins before they blow up. You can get 10% discount when you sign up with the link in the description below, and you can give it a test run for a week before you commit to a long-term plan. They publish detailed analysis on their website, Telegram groups, and via emails directly to your inbox, plus weekly webinars for all members where they go deeper in the technical analysis of the most profitable coins.
Token Metrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams.
Well, this concludes today's episode of Crypto Corner. Thanks for staying until the end. I hope this brought value to you, and if it did, please share it with someone else who will benefit from the content and the information that I shared here. Also, show your support by leaving a like and a comment below. Leaving comments will also qualify you for my summer giveaway. As you probably know, you can win prizes in Bitcoin, Ethereum, Litecoin, and a brand new Ledger Nano S. Well, this is the most popular hardware wallet device on the market. If you're new to crypto, consider getting a copy of my books, Learn Crypto, the Ultimate Beginner's Guide to Investing in Cryptocurrencies, and Crypto Jargon A to Z. This is a complete dictionary of all the crypto terminology that you see in articles, videos, and on social media. These 2 ebooks have already helped thousands of people turn from crypto newbies to experienced investors who know how the markets operate and how to avoid the mistakes that every new investor makes. Links are in the description below. Make sure that you catch my next episode. If you haven't done that yet, hit the notification bell so that you know when I post a new video. If you want to see more Crypto Corner episodes, just pick one of these.